You're watching Silver News Daily. Subscribe for more.
Silver's about to explode, and most people have no idea what's coming. Right now, the market is flashing signs that contrarian investors dream of. A massive supply squeeze, record-high industrial demand, and a financial system on edge. But here's the shocking part. Despite silver's rally to 3-month highs, the average investor is still asleep at the wheel. Think this is just another hype cycle? Then explain why major institutions, central banks, and billionaire investors are quietly making their moves. Today, we're breaking down exactly why silver could be on the verge of a historic breakout, why the smart money is already positioning itself, and most importantly, how you can take advantage before the rest of the world catches on. And trust me, you won't believe some of the forces driving this market right now.
Including uranium, traditionally has been priced off the spot market, which meant that you never knew as a producer how much you'd be able to sell or what you'd get paid. It's difficult to do accurate cash flow analysis if you don't understand the selling price. If you don't understand the selling price, how do you understand margin? So uranium, like every other commodity in the world, was geared to the tyranny of the spot market. I would try to construct models myself as to the fully loaded cost of production, including the cost of capital, and do copper price forecasts as an example, based off a blend of the forward strip and the total cost of production, including social rents and the cost of capital. And I got closer than people who didn't make models, but nowhere near close enough. What's changed in uranium, unlike any other commodity on the planet, is that we're progressing from a spot market to a term market. Developers and producers are able to enter into contracts, some as long as 30 years, with investment-grade counterparties, Southern Company, Duke Power, Tokyo Electric Power, China General Nuclear, that specifies within ranges the price paid and the amount sold. This certainty as to revenue eliminates a ton of risk in the space. And it also means that developers who would not be able to raise the capital to build their mines can now raise it, because they can literally take the offtake contracts to the bank as collateral, given that they're investment-grade counterparties. It doesn't mean that the developers will choose to build them. They may end up selling them to the Rio Tintos or the Camecos of the world. 10 years ago, they would have had to have sold them. And that had an impact on pricing. If Cameco knew that they were the only logical buyer, they were disinclined to be generous. But that's changed now. And the fact that investors don't understand this, the fact that investors are more focused on nebulous demand from SMRs or data centers that haven't been proposed, haven't been financed, haven't been approved, haven't been built, and less focused on the availability of offtake with credit-grade counterparties and utilities, is really, truly silly.
Silver has been on a relentless upward climb, hitting $32.50 per ounce, marking a 3-month high. But here's what makes this rally different. It's not just another short-lived spike. This surge is happening while the broader economy faces deep uncertainty, from rising global tensions to fears of a prolonged recession. Whenever the markets get shaky, investors run to safe haven assets like gold and silver. But unlike gold, silver is still massively undervalued relative to its historical price ratio. Right now, the gold-to-silver ratio sits at 88.33, meaning it takes 88 ounces of silver to equal the price of just 1 ounce of gold. Historically, when this ratio is this high, silver has exploded in price to close the gap. The last time silver made a major bull run in 2000, this ratio tightened dramatically, and silver surged to nearly $50 an ounce. And it's not just historical trends pointing to a breakout. Silver has been riding 3 straight weeks of gains, despite the US dollar seeing strength in global markets. Normally, when the dollar rises, silver falls. But this time, silver is holding strong, signaling that demand is overpowering typical market forces. This is exactly the kind of setup that contrarian investors live for. A heavily undervalued asset, clear bullish momentum, and a market that still hasn't woken up to what's happening. But price action alone doesn't tell the full story. The real reason silver is set to skyrocket? The world is running out of it. And that brings us to the next major force behind silver's rally: crippling supply constraints and a historic deficit.
Speculator in 100 understands the structure of the uranium market. They're involved in the macro narrative, which is great. But there's elements of the market, which we'll discuss in a couple of minutes, that are critical, and people pay no attention to them, which is lovely. Being a contrarian in uranium meant that you had the courage to buy it when it was at $20 a pound, with the industry average industry average cost being $60 a pound. That's gone. We're $70 and change a pound. We attracted a lot of people to the thesis. By the way, we didn't attract them to the thesis when it was a contrarian activity. We attracted me, which is good enough for me, but a contrarian activity is when you're buying a commodity, you're buying producers or advanced explorers, developers in the sector, when the selling price of the commodity on a global basis is below the industry average cost of production. That's a contrarian. What's happened now is that the bloom has come off the rose. The froth is gone. The people who were attracted to the narrative of uranium without understanding the structure of the uranium market, although the narrative is intact, have run out of patience. There are all kinds of people on X who are posters with uranium something being part of their handle. By the way, mine is Rick Rule, real subtle. And I noticed that, uranium hummingbird, uranium moron, uranium goofball, these are parenthetic, of course. All of these people who identified themselves as uranium experts 2 years ago, after at least 6 months of study, have capitulated, which is great. That means that the hot money is gone, or at least that the hot money is going out. And it means that the premium that was built into uranium stocks that was unrealistic has exited. That's a wonderful thing. And probably the stuff that trading profits are made of, although I'm not a trader. What really appeals to me in the uranium trade, right? Well, two things appeal to me. The first is that a whole bunch of people got attracted to the sector because of data centers and AI. This is demand that'll take place 7 years from now or 8 years from now. On a net present value basis, it doesn't matter a bit.
Silver isn't just a precious metal. It's the backbone of modern industry, and right now, demand is far exceeding supply. For the 5th consecutive year, the silver market is facing a historic supply deficit, and projections for 2025 show this shortfall only getting worse. Here's why. First, industrial demand for silver has never been higher. Last year alone, solar panels consumed over 20% of the global silver supply, making it one of the fastest-growing uses for the metal. And with governments worldwide pushing aggressive renewable energy policies, silver demand from the solar industry is expected to surge even higher. But it's not just solar. The electric vehicle EV boom is another major driver. Every EV on the road contains between 25 and 50 grams of silver, used in everything from battery connections to advanced electronics. As global EV production ramps up, so does silver consumption. Now, you might be thinking, if demand is so high, won't mining just increase supply? That's the problem. It won't. Silver mining output has been declining since 2016, with major producing countries struggling to meet demand due to lower ore grades, environmental restrictions, and higher production costs. Unlike gold, where new discoveries are still being made, large-scale silver deposits are becoming harder to find. And here's the kicker. Governments and financial institutions are taking notice. Some analysts believe that if this supply squeeze continues, we could see a major silver supply crisis within the next few years. So what happens when demand keeps climbing, but supply can't keep up? That's when prices go parabolic. And guess what? The biggest players in global finance are already preparing for this. That brings us to the next major force driving silver's surge: why central banks and institutional investors are quietly making their moves.
Depending on who you're talking to. How much money will it take for you to drill these 20 holes? And what other exploration expenditures will you incur? For sake of argument, it's going to be $5 million, just so that we can have a conversation between ourselves. Sure, I get it. And how much general and administrative expense will it take to keep the company alive until I answer the unanswered question? Well, G&A, listing fees, rent, salaries, that's, $2 million a year. So it's going to take $3 million in G&A and $5 million in project expenditures. That's $8 million. So you look at the balance sheet and you see that they have $1.5 million in cash. So how are you going to answer $8 million worth of questions for $1.5 million? You have to ask the CEO that. I understand. I'm really excited about the data from your surface anomaly. I like the fact that your CFO has experience in raising money, that your chairman has experience with gold exploration and First Nations relationships in Western Canada. I like the fact that you have been successful as an explorationist. I like all that. I don't like the fact that you have $8 million worth of unanswered questions and you have $1.5 million to get it done. Seems to me that you're $6.5 million short. How will you address this? That's important. When somebody says to me, well, I have a close relationship with Haywood. Haywood were raising money. Oh, really? Who at Haywood? I know a lot of guys at Haywood. I might be able to glean some extra information from these people who are going to give you the money. And are they going to give it to you all at once? Or are you going to raise enough money for this year's drilling campaign, and then based on the strength of that, raise more money for next year's campaign? It's important because that information will be very germane to your trading strategy. If it looks to you like the first year's drilling campaign isn't yielding good results, you can't afford to hang out for the second year, because if they raise the money for the second year, you're going to raise it at much lower prices. That's why I told the people at the Minerals Investor Forum that they had no excuse not to become a millionaire. They have the ability to be that one investor in 100 that asks the questions. They have the ability, and you do too, to develop what in my youth we called a Rolodex, you now call contacts, with people that you can call to get information, independent verification.
If silver is just another commodity, why are some of the biggest financial players quietly making moves into it? For years, central banks have been aggressively accumulating gold to hedge against inflation and economic instability. But now, a growing number of analysts believe that silver could be next. While central banks haven't traditionally held silver in their reserves, the shifting global financial landscape is forcing them to reconsider its role. Some financial experts speculate that as nations continue to move away from reliance on the US dollar, silver could become a key strategic asset, much like gold has been for decades. But central banks aren't the only ones watching silver. Institutional investors and hedge funds are also stepping in. Silver-backed ETFs have seen a significant rise in inflows, and futures traders are increasing their long positions, signaling growing confidence in silver's upside potential. And here's the part that most people are completely missing. Silver isn't just a financial hedge. Governments are stockpiling silver for industrial use. With silver's critical role in solar panels, high-tech manufacturing, and military applications, some analysts believe that certain nations are quietly securing their silver supply before shortages get worse. So, let's break this down. Central banks are shifting toward hard assets to protect against economic instability. Institutional investors are increasing their silver exposure through ETFs and futures. Governments are stockpiling silver for critical industries, anticipating future shortages. This isn't speculation. It's happening right now. But despite all this, the general public still isn't paying attention. So the question is, what happens when mainstream investors finally wake up to the silver shortage? That's when we enter the final phase of a silver bull market, the point where prices start moving fast. But this story isn't just about demand. Geopolitics is playing a massive role in the silver market right now. That brings us to the next major force driving silver higher: how global trade wars and economic policies are reshaping the silver market in ways most people don't see coming.
That's good to know. That means that I can throw his company away and I can file him or her in the moron category, which is to say, the next time I see them involved in something, I don't have to waste much time with them. After you have ascertained that the management team is not a coalition of butchers and bakers and candlestick makers, but in fact have been successful, that the success is related to the task at hand, you look at the unanswered question. How long will it take to get an answer? And particularly, how much money will it take to get an answer? Let's say that the CEO says that we have a surface anomaly in northern BC, golden soils, and we have some truly spectacular surface samples. But importantly, the area covered by the surface sample would be permissive for a very large deposit. We have, in addition to taking surface samples, we've trenched it. And it's obvious that the material isn't transported material, but is in fact in situ. And what we now need to do is drill it, get the third dimension so that we can begin to put tonnage and grades together. And while it's likely that it'll ultimately require 20 drill holes, we propose to drill 10 drill holes this season, and based off the information we get from this season, 10 more drill holes next season. Now, what the CEO has told you is that answering the unanswered question will take 2 drilling seasons, or a minimum of 18 months. Armed with that information, you know that this thing isn't a 6-month hold. You know that you need to be prepared to own this stock for 18 months.
What if I told you that government policies and global trade tensions could be the final trigger for silver's breakout? Right now, the US-China trade war is escalating, and silver is caught in the middle. The US recently imposed a 10% tariff on Chinese imports, and in response, China slapped a 15% tariff on US coal and LNG, plus a 10% tariff on crude oil and automobiles. But here's what most people don't realize. These tariffs are reshaping global supply chains, and silver demand is surging because of it. For example, with the US pushing for energy independence, the demand for solar energy and battery storage has skyrocketed. And since silver is a critical component in both, this shift is creating an even tighter supply squeeze. At the same time, deglobalization is forcing countries to secure their own supply of key metals, and silver is becoming a strategic resource. Nations are hoarding precious metals, diversifying away from the US dollar, and preparing for greater economic uncertainty. But that's not all. The global defense industry is another major player. With rising geopolitical tensions, governments are ramping up military spending, and silver is a key material in advanced weaponry, aerospace technology, and communication systems. This is another under-the-radar demand driver that could send silver prices soaring. So let's put it all together. The US-China trade war is fueling silver demand as supply chains shift. Governments are stockpiling silver as a strategic resource. The defense industry is ramping up silver usage for advanced military tech. And yet, despite all of these catalysts, most investors still aren't paying attention. But there's one group that is: the contrarian investors who specialize in undervalued assets before they explode. And that brings us to the real reason silver is set to skyrocket: why smart money is betting big while the masses stay asleep.
The most important thing is that the CEO answers you. I made the point at the Middle Investors Forum. Many people in the audience said, well, you're Rick Rule, so you have access. And then I pointed out to them that every single exhibitor at that conference had paid $10,000 to be there that day. They want to talk to you. If they don't want to talk to you, they're telling you something very important, that they don't care about their cost of capital, their shareholders. So start with the IR person. It's their job. But get the IR person to get you in touch with, at worst, the CFO, at best, the CEO. Their willingness to talk to you is a really good indicator as to how serious they are. If they aren't willing to talk to you, they're telling you something important, which is to say that they don't value shareholders. That's a really good sell signal.
Right.
So, having gotten that precondition out of the way, there's two questions that are critical. The first is that you only want to do business with serially successful people. And you only want to do business with people whose success is related to the task at hand. So say to the CEO, I have a general sense of what your company's about. Have you been successful doing this before? Have your employees, your partners, been successful doing this before? And has your board been successful doing this before? Describe your human team in the context of the task at hand. Because you want to know whether you should care about this person's portfolio, this person's opinion. The second thing you do is say, tell me the most important unanswered question. Tell me what the market doesn't know about your company, that if they start to know, will increase their perception and increase their share price. Andy, I've been asking this question for 40 years. And 80% of the time I answer the question, the CEO will say to me, I've never thought about it in context. Which is to say that the CEO doesn't have a plan.
The biggest gains in investing come from spotting opportunities before the crowd. And right now, silver is shaping up to be one of the most undervalued and overlooked opportunities in the market. Legendary contrarian investors like Rick Rule have built their careers by buying assets when nobody else wants them. And silver is fitting that exact pattern right now. Think about it. Silver is at a multi-month high, yet retail investors are still focused on stocks and crypto. Industrial demand is at record levels, but the mainstream media isn't talking about the supply squeeze. Central banks and institutions are increasing their exposure, but the average investor isn't paying attention. Contrarians understand a fundamental truth. By the time the masses rush into an asset, most of the gains are already gone. And historically, silver moves fast when sentiment shifts. In 2011, silver surged nearly 500% in under 3 years as demand spiked. In 2020, silver skyrocketed from $12 to nearly $30 in just 5 months during global economic uncertainty. And in 2024, the setup looks eerily similar, except now, silver is starting from a much stronger demand base. So here's the big question. If history repeats itself, where could silver be headed next? That's what smart investors are trying to figure out. They see a historic supply crunch that can't be ignored, massive industrial growth in sectors that can't function without silver, a market that's still asleep, but not for long. But this isn't just about trends and speculation. There are concrete indicators that silver could be on the verge of a massive breakout. And that brings us to the next key piece of the puzzle. The technical signals that show silver could be about to explode higher.
In the world, there's probably, 2,500, 3,000 of them. Into one company, we'll call it Junior Explorco. In a very, very good year, that company, the industry, would only lose $2 billion. They'd only lose $2 billion because they couldn't raise too much more. In a bad year, they could lose $5 or $6 billion. They would call that a good year because they raised that much money. But the point of this, at the beginning of the exercise, is your listeners have to ask themselves how much money they would be prepared to invest in a company that lost $2 billion a year. Would they invest 8 times losses or 12 times losses? In a bull market, would they invest 15 times losses? When they're sick with that number, then they're ready to go. Because a subset of those companies, 5% of the issuers, maybe 10% of the issuers, generate so much value that they add legitimacy and even luster to a sector that loses $2 billion a year. The game then is how to separate the wheat from the chaff, how to know enough that when the stock that you've done work on declines by 30 or 40 or 50% in price without declining in value, that rather than being shaken out and selling at a panic bottom, that you understand that the value is increased and you buy more. That's the game. And the reason that I said to the people in that audience that they had no excuse not to make $1 million or more in 5 years is because they'd taken the first step. They had invested in themselves to come to this conference in Vancouver, the epicenter of junior mining finance, and invest in themselves. For those people who were willing to do the work, who were willing to enter now, this is truly, truly, truly a spectacular time. But it's only a spectacular time if people are willing to examine themselves and examine their reaction to the risks that we just enumerated.
Silver isn't just moving higher, it's setting up for a potential breakout that could catch the entire market off guard. Contrarian investors aren't just betting on silver because of supply constraints or industrial demand. They're watching the technical charts, and right now, silver is flashing some of the strongest bullish signals we've seen in years. Let's break it down. Silver recently hit a 3-month high of $32.50 per ounce and is maintaining an upward trajectory despite fluctuations in the broader market. The price has consistently held above key support levels, staying above both the 9-day and 14-day exponential moving averages, EMAs, a classic bullish signal. The Relative Strength Index, RSI, is nearing 70, which typically indicates strong momentum. If silver breaks past this level, it could trigger a wave of new buying interest. But here's where things get really interesting. Silver has formed one of the largest cup and handle patterns in history, a textbook technical indicator of an incoming major breakout. This same pattern preceded silver's massive run to $49 per ounce in 2011. If history repeats itself, we could be looking at a silver price explosion that shocks the entire market. And it's not just the charts pointing to higher prices. Market sentiment is shifting. Hedge funds and institutional traders are increasing their long positions on silver futures, and options markets are seeing a sharp rise in call option activity, meaning more traders are betting on silver moving higher. Even mainstream analysts, who have largely ignored silver for years, are starting to issue bullish forecasts, with some calling for 50 silver by mid-year. So, let's put this all together. Technical indicators show a breakout pattern forming. Momentum traders are jumping in. Institutional money is starting to flow into silver. Mainstream analysts are finally paying attention. And yet, most people still aren't looking at silver. But if history is any guide, this could be the last chance to position before silver goes parabolic. So now comes the biggest question of all. How high could silver actually go? That's exactly what we'll break down in the final step, the apex, where we'll connect all the dots and reveal why silver's next move could be its biggest yet.
That likely has a 5-year expected course. Many others speculate on exploration outcomes that might take 18 months to mature. And despite the fact that these investors are investing in identifiable and accurate narratives, they employ very short-term tactics. If you are investing in a 5-year narrative and you have a 3-month time frame, you're almost guaranteed to fail. The greatest part of my financial success, other than risk tolerance and being willing to work, is that I got old. And I came to understand that I needed my time expectation to conform with what was required. I needed to be able to experience compounding. Even on the speculative side, what I learned, and it actually surprised me, is that over 50 years, the speculative stocks that I enjoyed tenfold or more returns on generally required 5 years to enjoy those returns. And in almost every case during that 5 years, the share price in question fell by more than 50% at some point in time in that 5 years. So in addition to being patient, you have to be tenacious. So that was the point of that speech. The point of the speech was that we are in a period now where people hate junior resource stocks. We're in a place now where the people who are left in junior resource stocks are Fed chasers. They're anti-contrarian. We're in a place now where people's investment strategy is, quote, got a hunch, bet a bunch. They aren't willing to do the work. And we're in a place now where all kinds of people who don't know anything about trading consider themselves to be traders rather than speculators. If you address those 4 things within your own character, there is no sector that I know of that has a better potential risk to reward than the junior miners. Let's start, though, with the headline risk. The sector itself, the whole sector, sucks. Let's get that clear. If you merge every junior miner